All right, so you want to get a real handle on what's going on in the Indian stock market.
Absolutely.
Not just like the headlines,
Yeah.
but like those deeper trends, the things that are actually
Right.
driving things and,
The forces at play.
the forces at play.
Yeah.
That can help you make like smart decisions about what to do.
Smart decisions, informed decisions.
Informed decisions, yeah.
Yeah.
So we're going to take a deep dive into this WhiteOak Capital report that you sent over.
Okay.
Lots of charts and data
Yeah.
going back decades.
Indicates, yeah.
But don't worry.
Well,
We've
gone through it.
gone through it all
Yeah.
to try to like pull out,
those nuggets. Yeah.
uncover those nuggets for you.
Absolutely. And that historical perspective is so key.
Yeah.
We'll look at where the Indian market is today, what's driving it, and how it all fits into the bigger picture.
Okay, so let's unpack this.
Okay.
Starting with the big picture, right?
Yeah.
The BSE Sensex,
Right.
which is like India's
Major stock index. Yeah.
major stock index.
Yep.
I see from your notes that it's seen some pretty impressive growth over the past 5 years.
It has.
Yeah.
Yeah, but here's what's interesting.
Okay.
Corporate earnings growth has actually been even stronger than the index itself. So earnings per share,
Okay.
or EPS,
Right.
has grown at a compound annual growth rate of 17.1%,
Wow.
compared to 15.1% for the Sensex.
Okay.
So that means companies are becoming more profitable, which should be a good sign for investors.
Right.
It might signal that there are opportunities to invest in companies that are outperforming the market as a whole.
That makes sense. Stronger earnings usually translate to a higher stock price.
Usually.
Right.
Yeah.
But is this just like a recent phenomenon? Or is this growth part of a longer trend?
It's actually been remarkably consistent.
Right.
So if we zoom out and look at the past 3 decades, earnings growth has been pretty much aligned with India's overall economic growth, which is measured by nominal GDP.
Right.
Both have grown at almost the same rate, a 12.5% compound annual growth rate.
Wow. Okay.
What's, I think, fascinating here is this connection really demonstrates how closely the stock market is tied to the real economy in India.
Yeah.
It's not just about speculation.
Right.
It's about the growth of businesses, that fuel the country's progress.
So the stock market isn't just some abstract entity.
Right.
It reflects the real economic activity
Exactly.
happening on the ground.
Exactly.
That's a good point.
Yeah.
But with all this impressive growth,
Yeah.
should we be worried about like a bubble? How are valuations looking?
That is the million-dollar question.
Right.
The WhiteOak report delves into some key valuation metrics,
Okay.
like the price-to-book ratio, which compares a company's market value to its book value,
Right.
and the yield ratio, which compares market valuations to long-term interest rates. And these ratios can help us gauge if the market is overvalued or undervalued compared to its historical averages.
Okay. Interesting. So what's the verdict?
Well, let's just say,
Yeah.
understanding these metrics is crucial for making informed investment decisions.
Right.
It's not always about chasing the hottest trends. It's
Right.
about, finding value and balancing risk,
Right.
which these ratios can help you assess.
Okay. So no easy answers there.
Yeah.
But I understand why those are important to watch.
Very important.
Another big factor I'm curious about is the role of foreign institutional investors,
Right.
or FIs.
FIIs, yeah.
The report mentions that they've pulled out a lot of money recently.
Yeah.
That seems like a pretty big red flag, doesn't it?
It's true. They have withdrawn a significant amount.
Yeah.
About $20.2 billion, to be exact.
Wow.
But context is important.
Okay.
When we look at this outflow as a percentage of market capitalization.
Right.
It's actually smaller than what we saw during previous events like the 2008 global financial crisis or the 2011 U.S. credit rating downgrade.
So while 20 billion sounds scary,
Yeah,
it might not be as alarming as it first appears.
exactly.
Yeah.
It's all about keeping a level head and not overreacting to short-term market fluctuations.
It seems like understanding historical trends can really help put things in perspective.
Absolutely. It's crucial to compare current events with historical trends to truly understand what's happening.
That makes a lot of sense.
Yeah.
Now, this is where things get interesting.
Okay.
The report says that while FIIs have been selling
Yeah.
domestic institutional investors,
Right.
also known as DIIs,
DII.
have actually been buying.
Buying.
Why would they be doing that?
That's a great question.
Right.
It suggests that DIIs might have a different perspective on the Indian market compared to FIIs. They may see long-term potential in the Indian market,
Right.
despite any short-term volatility.
Right. Caused by the FII outflows.
It's saying, and like they're taking advantage of the situation,
Yeah.
while others are heading for the exits.
Right.
Do we have any insights into why DIIs might be more optimistic?
Well, DIIs might have a better understanding of local market dynamics,
Right.
regulatory changes, and the potential of specific sectors.
Right.
They might also be more confident about India's long-term economic growth trajectory, especially with initiatives like Make in India and the government's focus on infrastructure development.
So it's not like a one-sided story.
No, not at all.
We've got different groups of investors
Different perspectives.
with varying views, motivations,
Yeah.
and understanding their perspectives can give us valuable insights
Yeah.
into market sentiment.
Absolutely.
Now let's dive into some specific sectors.
Okay.
What can you tell us about financial services and healthcare?
Okay.
Two key areas that are highlighted in the report.
So financial services presents an interesting situation.
Right.
While the sector has lagged the broader market recently.
Meaning its performance hasn't been as strong as the overall market.
Right.
The report points out that Indian banks are actually in their healthiest state in a decade.
Wait, so the sector is underperforming,
Right.
but the underlying banks are strong.
Yeah.
That seems a bit contradictory.
It does, doesn't it?
Yeah.
But the data supports this claim.
Okay.
Indian banks have strong net interest margins, meaning the difference between the interest they earn on loans and the interest they pay on deposits is healthy.
Okay.
They've got solid net interest income growth.
Right.
And their return on assets has significantly improved over the years, even their NTL coverage ratio,
Okay.
which measures how well they're prepared for bad loans,
Right.
is near its highest level in a decade.
So the fundamentals look good,
Yeah.
but the sector isn't performing well.
Right.
What's going on there?
It's likely a combination of factors.
Okay.
Global events,
Oh, yeah.
like rising interest rates in developed countries or geopolitical uncertainty, can weigh heavily on financial markets worldwide, including in India.
Makes sense.
There might also be, specific concerns within India's financial landscape,
Right.
perhaps related to regulations, competition, investor sentiment, things like that.
So it's a complex picture,
It
but
is-
for investors who do their homework,
Yeah,
there could be some hidden gems in financial services, right?
potentially, yes.
Yeah.
Sometimes when a sector is out of favor,
Yeah.
it creates opportunities for those who can spot value where others might not.
Right.
But thorough research is essential.
That makes sense.
Yeah.
Now let's switch gears to healthcare.
Okay.
You mentioned that it's been a consistent performer
It has.
and has shown low correlation with the broader market.
Low correlation, yeah.
Can you elaborate on that?
Sure. Healthcare, particularly in India,
Yeah.
benefits from some strong long-term growth drivers.
Okay.
So think about the rising middle class,
Right.
increasing life expectancy, growing focus on health and wellness.
Right.
These factors create a consistent demand for healthcare services, which translates to steady earnings growth for companies in the sector.
Right.
And that low correlation you mentioned
Yeah.
means that even when the overall market experiences volatility,
Right.
healthcare tends to hold its own.
Okay.
So making it attractive for diversification.
So healthcare could act as a stabilizer in a portfolio,
Yeah.
potentially smoothing out
Smoothing out those ups and downs.
those ups and downs.
Exactly.
Diversification is always a good thing,
Absolutely.
especially when markets are uncertain.
Especially when markets are uncertain.
Now, let's talk about another key sector, IT services.
Correct.
It's been a wealth-creating engine for India in the past,
It has.
but lately it seems to have hit a bit of a rough patch,
Yeah.
wouldn't you say?
It has.
Yeah, I've heard they've been underperforming.
Yeah.
What's behind this shift?
So there are several potential culprits,
Okay.
global factors,
Okay.
like a slowdown in tech spending by businesses worldwide,
Okay.
or increased competition
Right.
from IT companies in other regions
Yeah.
can directly impact Indian IT firms.
Right, because their business model relies heavily on
Providing services to clients globally.
declines globally.
Yeah.
So if global tech spending weakens,
Right.
that could have a direct impact on their revenues.
Exactly.
Right.
And then there's the issue of evolving business models.
Right.
The entire IT industry
Yeah.
is moving towards digital transformation,
Right.
cloud computing, automation.
Right.
Indian IT companies are adapting.
Yeah.
But this transition takes time
Yeah.
and can impact their short-term profitability.
So it's not necessarily a sign of doom and gloom
No.
for IT services,
Right.
but more of a period of adjustment
Adjustment
and repositioning.
and repositioning, yeah.
Investors need to be aware of these challenges and how companies are adapting.
Absolutely.
But before we wrap up this part of our deep dive,
Oh.
let's circle back to those small and mid-cap companies.
Right.
You call the comeback kids.
Comeback hits, yeah.
What's driving their resurgence?
Well, small and mid-cap companies often represent emerging trends and sectors,
Okay.
and they tend to be more agile and innovative
Right.
than their larger counterparts.
Okay.
They can react quickly to changing market conditions and capitalize on niche opportunities.
So that agility could be their key advantage
It could be, yeah.
in today's dynamic and rapidly evolving business environment.
Absolutely.
Okay.
Plus, they offer investors exposure to potentially high growth areas,
Right.
which can lead to significant upside potential. But of course, higher potential returns often come with higher risk.
It's all about understanding your own investment goals,
Yes.
risk appetite, and diversifying your portfolio accordingly.
Absolutely.
This has been fascinating.
It has.
We've covered a lot of ground,
We have.
but there's still more to explore.
There is, and the next part of our deep dive,
Yeah.
we'll examine some of the broader market dynamics and historical trends that can offer valuable insights for investors.
I look forward to that.
All right. And we'll leave you with a thought-provoking idea to consider as you navigate the complexities of the Indian stock market. Stay with us. Welcome back.
Yeah.
We're going to dive a little deeper into specific sectors within the Indian market to kind of help you uncover
Right.
potential opportunities.
Last time you mentioned that financial services had some interesting contradictions.
Right.
It's underperforming as a sector,
Yeah.
but has fundamentally strong banks.
Yeah. Fundamentally strong.
So let's dig into that a little bit more.
Yeah.
What exactly do we mean
Right.
when we say it's underperforming?
Good question.
Yeah.
So the report highlights that the Nifty Financial Services Total Return Index,
Okay.
or TII,
Right.
which tracks the performance of financial companies, including dividends,
Okay.
has significantly lagged behind the Nifty 50 TRI, which is a broader market index.
Got it.
In fact, this difference in performance
Yeah.
is at its highest point in the past 15 years.
15 years.
15 years.
That's a long time to be lagging.
It is.
But then you said that Indian banks are in their best shape in a decade.
Right.
How can both of those things be true?
It does seem counterintuitive,
Yeah.
but the data paints a very clear picture.
Okay.
Their net interest margins,
Okay.
or NIMs,
Right.
which is the difference between the interest they earn on loans
Right.
and what they pay out on deposits,
Yeah.
are looking healthy.
Going.
Their net interest income growth,
Uh-huh.
the revenue they generate from interest is also strong.
Right.
And return on assets,
Okay.
a key measure of profitability, has also significantly improved over the past few years.
Okay.
Even the NPL coverage ratio,
Right.
which shows how well they're prepared for bad loans, is near its highest level in a decade.
So the banks are doing well individually, but the sector as a whole is struggling.
Right.
It sounds like there must be something else at play here.
Yeah.
What factors could be
Right.
dragging down the performance of the whole sector?
You're right.
Yeah.
There's usually more to the story than meets the eye.
Right.
Global events can often create headwinds.
Yep.
For example, if interest rates rise in developed economies like the United States,
Right.
it can make investors pull money out of emerging markets like India,
Okay.
seeking safer returns.
Yeah.
And geopolitical uncertainty, like what we're seeing in some parts of the world right now,
Right.
can also make investors nervous and lead to a flight to safety,
Right. Yeah.
impacting investments across the board.
So it sounds like there are a lot of moving parts
A lot of moving parts.
at play here.
Yeah.
But if the underlying banks are as robust as the report suggests,
Right.
this could be an opportunity
It could.
for investors who are, willing to take a closer look.
That's a possibility, yeah. Sometimes when a sector is out of favor,
Yeah?
it creates opportunities for investors who can identify value
Right.
where others might not.
It's like finding a hidden gem
Yeah.
in a dusty corner of a shop.
Yeah, exactly.
Okay, let's move on to healthcare.
Okay.
You said earlier that this sector has been a consistent performer
Yeah, it has.
with low correlation to the broader market.
Low correlation.
What makes it so unique?
Healthcare, especially in India,
Yeah.
benefits from a number of powerful long-term growth drivers.
Okay.
Think about it.
Yeah.
A rising middle class with more disposable income,
Right.
increasing life expectancy,
Uh-huh.
and a growing focus on health and wellness.
Yeah.
This translates to a steady and rising demand for healthcare services,
Right.
which leads to more consistent earnings growth for companies in the sector.
Right.
And that low correlation you mentioned,
Yeah.
that's what makes it so appealing for diversification.
Right.
The report shows that the correlation between the BSE Healthcare TII, which tracks the performance of healthcare companies in India,
Right.
and the Nifty 500 TRI, a very broad market index,
Yeah.
is quite low,
Mm.
especially when looking at returns over rolling 3-year periods.
So if I'm understanding you correctly,
Yeah.
this means that healthcare stocks don't necessarily move
Right.
in the same direction
Right.
as the overall market.
Not necessarily, no.
So even when the market is volatile or experiencing a downturn,
Yeah.
healthcare could potentially
Hold its own.
hold its own and provide some stability
Right.
to the portfolio.
Exactly.
Right.
That's precisely why investors often turn to sectors like healthcare
Yeah.
for diversification.
Sounds like a good way to
Yeah.
potentially smooth out the ride, so to speak.
Do that the right, exactly. Okay, let's move on to the elephant in the room, the
Okay.
one that we talked about earlier,
Right.
IT services.
Yeah. IT services.
They've been a huge success story
Yep.
for India in the past,
Right.
creating immense wealth.
Yeah. But they seem to have lost some of their momentum recently.
They have.
Yeah.
The report acknowledges their impressive long-term wealth creation track record,
Mm-hmm.
but also highlights their recent underperformance.
And you're right to point it out.
Yeah.
It's significant shift from their past performance.
It is, yeah.
So what has changed?
Yeah.
Why aren't they keeping pace with the broader market anymore?
Yeah.
What's driving this underperformance?
There are a number of potential explanations.
Okay.
Some global, some more specific to the sector.
Yeah.
Global factors like a slowdown in tech spending by businesses worldwide
Right.
can directly impact Indian IT companies
Right.
because their business model relies heavily on providing services to clients across the globe.
To clients globally.
Globally, yeah.
So if their clients are cutting back on their tech budgets,
Right.
that directly affects the revenues
It does.
of Indian IT firms.
Exactly. And
Right.
then there's,
Are there other factors?
yeah, there are other factors impacting them.
Yeah.
Another key factor is increased competition.
Okay.
So other regions
Yeah.
like Eastern Europe and
Yeah.
Southeast Asia
Right.
were becoming increasingly competitive in the IT services market.
Okay.
They're attracting businesses
Yep.
with attractive rates and talent pools,
Right.
putting pressure on, profit margins for Indian companies.
It sounds like they're facing challenges on multiple fronts.
They are, yeah.
Are there any internal factors
Yeah.
contributing to this as well?
Yes, there's also the issue of evolving business models.
Right.
The whole IT industry
Yeah.
is in a state of transformation.
Right.
Cloud computing, automation, and artificial intelligence are changing the game.
Right. So they're having to adapt.
Yeah.
And that takes
It takes time.
time and money.
While Indian IT companies are adapting to these changes,
Yeah.
this transition takes time
Right.
and can impact their short-term profitability. It's a period of adjustment, both in terms of technology and how they deliver services.
So it's not necessarily a case of Indian IT companies doing something wrong,
No.
but rather
It's a need to adapt to a rapidly changing global landscape.
it sounds like investors need to be paying close attention
They do.
to how these companies are navigating this new environment.
They do, yeah.
It's a reminder that even sectors with a strong track record
Yeah,
need to constantly adapt and innovate to stay competitive.
absolutely.
Now, before we move on to the broader market trends,
Okay.
I want to circle back to those small and mid-cap companies.
Small and mid caps.
Earlier, you referred to them as the comeback kids.
The comeback kids, yeah.
What's behind their resurgence?
So small and mid-cap companies tend to be
Yeah.
more agile and innovative than
Right.
their larger, more established counterparts. They can react more quickly to changing market conditions
Yeah.
and often specialize in niche areas, allowing them to capitalize on emerging opportunities.
Their smaller size could actually be an advantage
It could be, yeah.
in a dynamic, rapidly changing business environment
Absolutely.
like we're seeing today.
It is.
They can pivot
Yeah.
and adjust
They can adjust
their
it
strategy
much more easily.
more easily. Yeah.
Yeah,
And they often represent new and emerging trends and sectors.
they do. Yeah.
Investing in them
Yeah.
gives you
That's
exposure
to potentially high growth areas.
Right.
Right.
So while they might be considered riskier
They are considered riskier.
than larger cap companies,
Larger caps, yeah.
because they are often newer and less established,
Newer and less
they
established.
could offer
Right.
greater upside potential
Greater upside potential, yes.
for investors who are
Willing to tolerate that additional risk.
willing to tolerate that additional risk.
Absolutely.
It's all about
balancing risk and potential reward.
balancing risk and potential reward
Right.
based on your individual
Yeah.
investment goals
Investment goals and risk appetite.
and risk appetite.
Exactly.
Okay.
It's important to do your research
Right.
and understand the specific companies and sectors you're investing in.
Right, regardless of their size.
Regardless of your size.
This has been incredibly insightful.
It has.
We've covered a lot of ground,
We have.
but I'm eager to hear more
Okay.
about the broader market dynamic
Broader market dynamics.
and how they might influence individual investment decisions.
Absolutely.
Okay.
In the final part of our deep dive,
Yeah.
we'll step back and examine some of the broader market trends and historical patterns,
Sure.
providing you with even more context and insights
I
to help you make informed investment decisions.
look forward to that.
And we'll leave you with a thought-provoking question to consider as you continue to explore the Indian stock market.
Okay.
Stay with us.
Welcome back to our deep dive into the Indian market.
Okay.
We've explored individual sectors,
Right.
but now I'm kind of curious to zoom out and look at the bigger picture.
Yeah, the bigger picture.
What are some of the broader market dynamics at play
Okay.
that could affect how I think about investing?
That's a great point.
Yeah.
Sometimes we need to step back from the individual trees to see the whole forest, so
Right.
to speak.
Yeah.
It helps provide crucial context for those individual investment decisions.
Right.
One of the interesting things highlighted in the report
Great.
is the dynamic between quality stocks and value stocks.
Okay.
Remember, quality stocks
Yeah.
are those companies with strong fundamentals, consistent earnings, and solid management.
Okay.
Value stocks, on the other hand, are
Yeah.
considered undervalued by the market.
Right.
Maybe they've hit a rough patch,
Yeah.
but there's potential for them to rebound.
Okay. So quality is more about steady, reliable growth,
Yeah, steady and reliable.
while value is about
Finding those hidden gems.
finding those hidden gems.
That might have been overlooked or temporarily out of favor.
It sounds like there's an element of risk assessment involved.
Exactly, and the report shows
Yeah.
that value stocks have actually been outperforming quality stocks for the past few years.
Interesting.
This shift is interesting because historically, investors have often flocked to quality stocks during times of uncertainty,
Right.
seeking that sense of safety and stability.
Right. So does this shift towards value stocks tell us anything about current market sentiment?
Yeah, it could.
Does it suggest that investors are feeling more confident about the future
Yeah, more confident about the future.
and maybe more willing to take on a bit more risk
Yeah, a little more risk.
in pursuit of those higher potential returns
Better potential returns, exactly.
that value stocks might offer?
That's one interpretation.
Okay.
It could also indicate
Yeah.
that value stocks have become so undervalued
Yeah.
that their potential for a turnaround has become too attractive for some investors to ignore. They might be seeing bargains that others are missing.
It's like a pendulum swinging back and forth,
It is.
sometimes favoring quality, other times favoring value.
Yeah,
It seems like recognizing those shifts can be beneficial
absolutely.
for investors.
Yeah, understanding those dynamics
Right.
can help you make more informed decisions
Right.
and potentially adjust your portfolio accordingly.
Right. Remember, both quality and value have their place in a well-diversified portfolio.
In a well-diversified portfolio.
Speaking of diversification,
Yeah,
the report also talks about India's growing role
right.
in the global market.
In the global market.
I was really struck by
Yeah.
how much its contribution to world market capitalization has increased
It has.
over the past few years.
Yes, it's quite remarkable.
Yeah.
Back in 2015,
Okay.
India's share of the global market cap was only around 2.1%.
Okay.
Now it's nearly doubled to 3.9%.
Wow.
And it's not just market cap.
Okay.
Its weight in the MSCI All-Country World Index,
Mhm.
a benchmark for global stock investors,
Right.
has risen from 0.9 to 1.8%
In the same time frame.
in the same time frame, yes.
So India is becoming a more significant player on the world stage.
Yeah, more significant.
What factors are driving this growth and increasing global recognition?
It's a combination of factors, really.
Okay.
You have strong economic expansion,
Okay.
a young and growing workforce,
Uh-huh.
increasing integration with the global economy.
Right.
India is becoming more interconnected
Yeah.
with global trade and investment flows.
Right. And that probably brings its own
It does.
challenges as well.
It does. Plus, the government has been implementing structural reforms aimed at improving the ease of doing business,
Okay.
attracting foreign investment,
Uh-huh.
and fostering innovation,
Mm-hmm.
all of which boost investor confidence.
It's great to see India's economic progress being recognized
It is.
and attracting investment from around the world.
Absolutely.
But I imagine this increasing global integration also comes with its own set of challenges.
Oh,
So
it does.
as India becomes more interconnected,
No, and it's right.
it becomes more susceptible to
Global headwinds.
those global headwinds.
Yeah.
Global
Yeah.
events like geopolitical tensions
Right.
or an economic slowdown in major economies
Yeah, exactly.
could have ripple effects,
Yeah, ripple effects, yeah.
potentially impacting India's growth trajectory.
You're absolutely right.
Yeah,
No market exists in a vacuum.
right.
Global events can and do have significant impacts on economies around the world.
Right.
And India is no exception.
Right.
That's why it's crucial for investors
Yeah.
to stay informed about what's happening globally,
Right.
to consider those potential risks,
Right.
and to factor them into their investment decisions.
Right. It's all part of that
Bigger picture analysis.
bigger picture analysis we were talking about earlier.
Exactly.
Okay, so we've got domestic factors to consider,
Right.
global influences, different investment styles to understand
Right.
various sectors with their own unique dynamics.
Unique dynamics, yeah.
It can feel a bit overwhelming at times, to be honest.
It can.
What advice would you give investors
Okay.
who are trying to make sense of it all
Yeah.
and navigate this complex landscape to find those opportunities?
It really boils down to a few key principles.
Okay.
First, do your research.
Right.
Don't rely solely on headlines or gut feelings.
Okay.
Dig into the data,
Mm-hmm.
read analyst reports,
Right.
and understand the companies and sectors you're investing in.
Okay.
Second, be clear about your own investment goals and risk tolerance.
Right.
Are you investing for the long term or the short term?
Right.
How much risk are you comfortable taking on?
Right.
These are crucial questions to answer before making any investment decisions.
Yeah, makes sense.
And third, don't be afraid to seek expert advice.
Right.
If you're feeling overwhelmed or uncertain,
Yeah.
consult with a financial advisor.
Right. Who can provide personalized guidance based on your individual circumstances.
That's great advice.
Hopefully it helps.
It's a reminder that investing is a journey,
It is a journey.
not a destination.
A journey, not a destination.
It's an ongoing process of learning, adapting, and seeking out information and guidance.
Absolutely.
This deep dive has been incredibly insightful.
It has been, yeah.
It's helped to shed light on some of the key trends and dynamics
Right.
shaping the Indian market,
Yeah.
both domestically and globally.
Domestically and globally.
I feel like I have a much better understanding of the forces at play and the potential opportunities.
Right, the opportunities.
As well as the risks.
And the risks.
It exists.
It's a balance.
Yeah.
I'm glad to hear it.
Yeah.
The Indian market is a complex and ever-evolving landscape,
It is.
but it's also a market brimming with potential.
Right.
By understanding its intricacies and staying informed,
Right.
investors can position themselves to capture that potential. And before we wrap up, you promised us a provocative thought to ponder.
I did. I did.
What is it?
Here's something to consider.
Right?
What if the recent FII outflows,
Yeah.
while viewed by many as a negative signal,
Right.
actually create an opportunity for long-term investors?
Hmm.
Think about it.
Yeah.
These outflows
Right.
can lead to lower valuations,
Okay.
creating potential bargains
Right.
for those willing to take a long-term perspective.
Right.
The Indian market is becoming increasingly resilient,
Right.
driven by strong domestic demand and structural reforms.
Okay.
And with DII stepping in to buy while FIs are selling,
Right.
it could signal a shift in market dynamics
Right.
and a potential turning point.
That's a really interesting perspective.
Oh,
It challenges the conventional wisdom
Yeah.
that FII outflows are always a bad sign.
Right.
It suggests that
Sometimes, yeah.
sometimes those perceived setbacks
Yeah.
can actually present unique opportunities.
Unique opportunity.
For those who are willing to take a contrarian view
Yeah.
and Look beyond the immediate headlines.
Look beyond those headlines.
Yeah.
Exactly.
Yeah.
Remember, investing is often about identifying those moments where perception and reality diverge.
Right.
Those are the moments where
Yeah.
opportunities can arise.
Well, thank you for joining us today
It's been my pleasure.
and sharing your expertise.
Absolutely.
This deep dive has been incredibly valuable.
Good. I'm glad.
It's given us a lot to think about and consider as we navigate the exciting world of the Indian stock market.
It is an exciting world.
It is.
It is.
And for you, our listener,
Right.
we hope this deep dive has equipped you with the knowledge and insights you need
Yeah.
to approach the Indian market with confidence.
With confidence.
Until next time,
Yes.
happy investing.
Happy investing.